Felix here, and welcome to this pre-market live stream. I want to walk you through the two things that are scaring the market right now and why we might be seeing that beginning of the year dip. And then I want to walk you through the 4 reasons why, in my humble opinion, that dip won't last and things will be absolutely freaking amazing in 2025 for us investors and traders. But we need to be in the right stocks and in the right sectors. I want to walk you through that as well. Then as a bonus, I'm going to give you some insight into whatever charts and stocks you ask me about here live in the chat, so please do. Now, there are 2 new kittens in this very study, so I'm a little bit concerned that we might go offline at some point because these guys can't be trusted. I don't know if I can get any of them, but hang on, here is one. Here is one. This is the larger of the 2. This is Albert. We're training him up to be an options trader, aren't we, Albert? Something like that. So yes, that's what's going on here. Good morning, everybody. Let me share my screen with you and walk you through the key reason people are feeling a little bit spooked after the holidays. And I hope you had lovely Christmas holidays. It's a madhouse in here. I shouldn't have let them in. And they're now crawling over every wire and absolutely everything. I don't know if you can hear them. Alrighty, so this is what people are freaked out about. It's the US 10-year government bond yield. The what, you ask? Indeed, that would make you kind of a normal individual if you thought that that was the why do we care? Well, think about it this way. The yield is sort of like the interest rate that it pays. And there are not 2 cats crawling on my desk. And the easiest way to think about that is if interest on bonds is high, where do people want to put their money, right? Think about it as like there are bonds over here and then there are stocks over here. Where do you put your money if interest rates of bonds are high? Well, you're going to put more of your money into the bonds, right? And you're going to put a little bit less of your money into stocks, at least if you are, a fund or something. And we're going to get onto funds in a moment here. But we'll soon be used to the camera. Well, they were just crawling over the thing as well. So madhouse, absolute madhouse in here. So the easiest way I always like to think of it is just like if interest rates are high for bonds, then, well, more money flows into bonds. There's a little bit more to that, but that's sort of the way I look at that. So why are they high? Well, it's basically the market saying we don't think rates are going to come down. And we think this new government, these Trumponians, are going to do something that's going to cause more inflation. Right? This one's making a racket now. Why are you making such a racket? Come on here. Coffee chair, obviously. Slightly distracted here this morning. So, is that likely? Well, there is an argument that tariffs are inflationary. There is definitely something to that, at least in the short term. So, if we get all those tariffs, we might see higher inflation. And that might therefore lead to higher what? Interest rates, right? Hence the higher bond rates. Now, it doesn't take into account a bunch of other things, like they're also going to reduce the size of the government, although that might not happen as quickly. And thanks, Fox Gaming, for keeping things alive. And that would, in theory, reduce inflation, because the most inflationary thing in the world is what? The government, right? The government spending money. Slightly concerning that there are cats crawling all over the router and everything else. So that's the first thing people are freaked out about. The second thing people are slightly freaked out about, and there's maybe actually a third thing, but I'll get onto that in just a second. The cats add to the live. Yeah, if we can get them more into the stream. Where are they? Seriously, where are they? I can only see one. Just worrying. But I can hear a second one. Like she's trying to break out of something. And close that window at the top. 1 second. These guys are unpredictable. So this is Bank of America. They've just come out. Bank of America, biggest bank out there, basically, bank in the US. And they come out and they said, we expect 17 billion of US equities, as in stocks. I don't know whether I can't just use the word stocks, to sell into year end. They're saved on the D. Okay, let me show you the culprit number 2 here. This is culprit number 2. We called this one Sabrina, who is very, very sweet and rather small and very, very, very naughty, aren't you? Very naughty. So future chief research analyst material, of course, but at the moment, very much in training and chewing everything. So yeah, we're expecting basically a little bit of a sell-off. Why are they selling off? It's pension funds. Now, why, you wonder, are pension funds selling stocks in the most wonderful rally ever, right? Because they want to miss out on the rally, maybe they just had too good of a year. No, it's the quarterly rebalance. And why do they rebalance? Well, they have a rule. Say their rule might be, this is their pie, and maybe they need to be 50% in stocks and they need to be 50% in bonds. That would be sort of a simplified pension fund setup. So what's happened? Well, the stock market's rallied 30-something% this year. So stocks now make up more than the 50%. So they're going to have to sell some stocks. It's a way you ensure underperformance. And that way your pensioners stay poor, which is sort of the goal, it seems, of most pension funds. I'm being a bit cynical here, but that seems to be what most of them achieve. Now, I did tell you there were 4 pieces of good news here, though, which is really, these guys are just climbing over everything, which is good news. And I think we have to always separate the media and the news headline and the story, so I'm trying to focus here, into short-term FUD and then medium-term and then longer-term. And as an investor, you kind of want to think in those time frames. So short-term is like a week or two, medium-term is like a month or 2 or 3 maybe, and then longer-term is 5 years, 10 years, 20 years, 30 years, that sort of type of thing. And then there's the very long-term, and then you're dead. So game's over. They're now chasing each other through this little study. So in the short term, retail, that's you and me, we're selling less than expected. So typically in December, there is a thing called tax loss harvesting, which basically means you close your losing positions, you realize those losses, and then you close some winners, and then you offset the losses against the winners, and that way you pay less capital gains tax. That's a big thing in the US, and so typically in December, you see a little bit of that. The kiddies want your electrolytes. I fear they've already had some of those. Otherwise, they wouldn't be bouncing off the... Oh, they've got one of those cable ties off and are now kicking that around on the floor. Well, I'm glad they're having some fun. They are naughty kittens. So this is kind of offsetting, in my view, a little bit here, what the pension funds are doing. Now, let me show you briefly what's live pre-market. There's a little bit of that headline news here flowing into the market, right? Which is all the red. It's all moderate red, but it's all red now nevertheless. So let's understand a bit more what's happening in the medium term, right? So we had data out just before Christmas. What if you trade in a Roth IRA? That makes you a very smart man. Paul, and keep doing that, because that's the best place to do it. If you're American and you're not using your Roth IRA to trade, I would argue you're missing the biggest tax gift that government will ever give you. They're going to chew the wires and get shocked like Christmas vacation. Well, let's hope they don't do that. So far, they seem to be happy with sort of clippy thingies. So like 2 of them running around the floor here. Can't get to the buggers. What's the good news? There are more people unemployed, yes. And as a former banker, it's the sort of thing you'd expect me to say, right? Let's celebrate, guys. Let's open the champers. There are more people unemployed. I don't mean it in that way, but it might come across like it that way. So yes, we have more unemployed people now than we've had at any point in more than 3 years, which is a sign that it takes longer for out-of-work people to find a job. And it's also a sign that the Biden number crunchers are retiring, because they were really, really, really good at manipulating numbers. So we're starting to see the reality here. Why is that important? Well, the Fed basically said that the jobs market is thriving. Now, the data now begs to differ, and that is good news. So if you're unemployed, you're doing a service to the impoverished stock investors. I can't get that out, but you get the idea, right? More unemployed people means lower interest rates. So lower rates mean what? Lower rates mean higher stock prices. Very, very, well, simple would be an overstatement, but you get the idea. Raj, I love being unemployed. So do I. But these guys are claiming unemployment benefit, which is not something I've ever done. That's a weird thing, actually. I remember I left, finished law school. There were literally people at law school who said to me, "Oh, brilliant! I'm taking the summer off and we're going to Italy or something." I said, "Oh, okay, nice." And they said, "Yeah. I've just got my unemployment check in this morning." I'm like, "You what?" And they're like, "Yeah. Getting getting whatever much." And I thought that was so sad and immoral that somebody who didn't need the money was claiming it, because yes, technically they were unemployed, but they actually had a job lined up like 6 months down the road with a major corporate law firm, so they weren't exactly unemployed in the classical sense of the word. But that's kind of, people just think that they're entitled to stuff, right? They don't really realize that someone's going to pay for that. But anyway, going back to the third reason here, why I think the market is actually going to do much better in January than we think. And Fox is reminding us here of something as well today, which I appreciate you for, Fox, and I'll share my screen, which is we're running a masterclass today in, I don't know how many hours, about 9 hours. And about 4,000 of you have signed up so far. Now, we had a room limit of 2,000. So I've messaged with the webinar hosting software company, and we now have a room limit of 3,000, which seems to be the limit. So I assume maybe another 1,000 of you will sign up today, and I encourage you to. I just want to encourage you to show up early, because we might literally be full, and there's nothing I can do about it. 3,000 people is the maximum we can fit into that digital room. For future events, we'll fix that, and we'll make sure we have sort of unlimited capacity. But for this one here, I'm thrilled that you guys want to learn. Very, very excited by that. So really looking forward to that in just a couple of hours, 6 p.m. New York time today. But here is another piece of data. This is from GS, which stands for Goldman and Sachs. Goldman Sachs, one of the biggest, most important investment banks out there, and they're basically saying that wages are growing at a much slower rate than they have been at any time since 2021. What does that say to you? The job market is slowing. What does a slowing job market say? Well, wages are not growing as quickly. What does that mean? That means lower inflation, right? And less economic activity and all of that. And what does that mean? That means essentially lower interest rates, which means what? Yes, indeed, higher stock prices. Charlie says, masterclass was truly life-changing, still removing it. I'm working on a rejig of it, but I was a little busy actually preparing for that webinar today. I still have to put the finishing touches to that presentation, but we're almost there. But yes, in all seriousness, come and join the webinar, the masterclass today. Maybe about an hour or so, depending a little bit on how long we natter on for, and I'll ask you some questions and stuff like that. But come and join us, and as I say, be on time. And almost lastly here, Syed says, my name is Nicholas. It is, my friend. My name is Nicholas Felix, and I have a vineyard, yes. And I was a banker and I was a lawyer. And you, my friend, are a twit. So I'm gonna kick you out here because you're an annoying twit. Thank you very much, Fox, for doing that. Some people are weird, right? There's a whole ecosystem out there of people who bottom feed and try and build some sort of business of other people. There's this whole thing out there that sort of calls everybody a scam when they try to sell something on that news. It's a very odd mindset, but you live and learn. Anyway, the wealth effect. What's the wealth effect all about? What happens when your stock portfolio doubles? How do you feel? You like bouncing around proud and, you know, broader shoulders, and they're telling everybody how much of a genius you are, probably, right? And what do you then also do? You're going to take the family out for dinner and lunch, and you're going to buy nice things, the Christmas presents get shiny and all that kind of stuff, right? That's the wealth effect. It's about how wealthy we feel. And the wealth effect is typically a factor of two things. In the US, particularly the stock market, stocks, but it's also the property market. So when your home suddenly doubles in value, you also feel wealthier and you tend to spend more money. But what we've seen here in 2023, 2024 is this massive, massive increase in the value of the family's stock market investment. The median is now 250,000. That's a statistical thing. Obviously, a lot of people are below that, and some people are massively above that, which skews it a bit. But just as a number, it's really, really gone up a lot. So it makes people feel more wealthy. People feel more wealthy, they spend more money. That's good for the economy. So that's another reason why I'm feeling rather good about that. Liked for kicking twits. Yes, I know, twits. Twits will be twits. I just think people find another way to like do something interesting with their life. Now, here is another one from Goldman Sachs. We're all today, you know, worshippers of the Goldman and the Sachs. And this is what they said. Many of the tent poles, pompous twit, of TMT, which is tech basically, the bull case are again intact into the new year. Generative AI, macro, which is falling interest rates, economy is doing pretty well. Then we have positioning not crazy, which means not everybody is like crazily long and leveraged to the hilt. We have good returns on capital, and we have the best margins in stocks that we've ever had and pretty decent growth. So Goldman Sachs is basically saying, let's fucking go in 2025, right? Well, paraphrasing slightly, but it would have made this a little bit shorter. So what does that mean then for us? Well, it means that you look at this today and it doesn't depress you, but you look at this as an opportunity. But I do think it is entirely possible that we might go a little bit lower. Until when? I would say, well, it depends a little bit on how swiftly and smoothly Donald comes in. So Trump comes in, I believe, on 20th of January, right? 20th of Jan. So on day one, he's going to sign a load of executive orders, and on day two there will be lawsuits to the Supreme Court for, you know, most of those thanks to the Democrats, and that's just democracy for you apparently. And the question is, how much of a surprise is that? You know, what are they actually doing? How long is it going to take for them to lower taxes, because that's something that Congress needs to be involved in. Tariffs he can basically do on day one. So he can do a lot of the stuff on day one that's a little bit more like punitive, but he can't really do the sort of positive stuff, the removing regulations and stuff like that, without, you know, the swamp, I was going to say, but you know what I mean. So, you know, the elected officials in who are serving their country gallantly and on the hill. Was that believable? I think so, right? So get away with that. So that's kind of the question. And then depending on how long that takes, depending on how quickly we're going to start to see some policy changes and some regulations reducing and taxes reducing, if it happens quickly, the market's going to go to Mars, right, according to Elon. But if it takes a long time, then we just have these possibly inflationary issues from inflation, from tariffs, and no sort of upside that Wall Street really likes. So we might be in for a bit of a bumpy January. That's essentially what I would say. Laurie asked my BBAI. Okay, I'm very glad you look at that. I'm always happy to look at anything you guys are interested in. BBAI. I haven't looked at that for ages. So much activity in this room here. So what does that look like to you? Well, classic, right? Classic pattern. Any of you watch the masterclass? Tell me what you're seeing here. Breakout kind of, well, sort of kicks off around here in mid-November, like many AI stocks. And then in early December, that's the Trump election bounce. And now we're doing it again. And whoops, I did it again. We're trading at 460 here. So it's a very bullish setup. Massive volume here on the last trading day. we had, which is surprising because most stocks had absolutely no volume whatsoever. So yeah, looks pretty bullish. A little bit late to the party, I would argue, but it definitely is a breakout and a half. Now these guys are now looking at the lights. This one is now looking up at the big lights I've got up here, thinking I could climb up that. Look at this. This is Sabrina, if you hadn't met her yet. Who's a rather active little kitten. Aren't you, Sabrina? Should I put you down? All right. Try not to sit on the keyboard. Oh, no, no, no. Escape. Okay. All right, we're still live. Could you look at your ledger? Funny enough, that was actually literally on my list today. Looks pretty good, right? Looks pretty good. That's a tiger cat. Yes, it's a vicious creature. She will eat you. This is Toyota here, absolutely flying off the shelf. And is that a breakout? Yeah, it's a breakout and a half. We're trading above it right now. So if anybody spotted that yesterday, well done you. We might actually talk a little bit about this on the live masterclass today because, oh, let me share my screen with you. Here it is. Because I'm looking here in Trade Vision, by the way, if you guys haven't checked out Trade Vision yet. And look what, we called it a buy signal yesterday. So you got an email yesterday, right, that said buy Toyota. I mean, it said, the indicator said buy. It didn't tell you to buy. Obviously, you still have to come to your own conclusion. So very useful to get those little alerts. It saves us a ton of time. And you can get that here at felixprehn.org/Trade Vision, which is a software that we built. She will bite like mine. No, this one doesn't bite. This one's actually very sweet, very gentle. Proper cuddler here. I think cats never really bite. If you get them young enough and you train them not to be gentle and be very gentle with them, then they usually are very sweet. So quantum stocks too early. I think quantum stocks isn't really too early. I think it's more of a question of you got to be in and out of those because it's going to be a very, very bouncy job here. Something like QBTS, look at that. When did the kickoff? Kicked off arguably early November, second time at late November, and then again here in sort of mid-December. And are we doing it again? It looks pretty good. It depends a bit on the volume, I think, that we put in today. But yeah, it looks very bullish. We've broken this morning at least through the resistance here at $10, which we didn't manage to on the last trading date here. So and big volume actually for a 26th of December. That was very impressive volume. So yeah, this looks actually quite powerful. Where do you see PayPal in the future, says Jacob? $200. Well, I mean, I'm a little biased because we do have a PayPal position open here, which at the moment it's always sort of up 40%. There we go, 39%. That's the last time we bought was in September. We bought it 2 or 3 times this year before and made money each time, but at the moment it's looking pretty promising. Any tips from any cat whisperers? Be gentle to them. Don't let them play with your hands. But yeah, just be very gentle with them, and they will treat you the same. Don't tease them, right? Because you'll teach them to tease you back. Cut their claws from the very early age, and do that regularly, and then they're just really sweet little kittens that kind of just bounce around and keep you entertained. Maybe she wants to be financially independent. She is rather. She never have to work, will she? Talking about 5 cats, we've got 4 now. Actually, we went from 3 to 2 and now to 4. So. Will Honey mess with PayPal? I don't think so. I don't think it's that big a story. I know some YouTubers are rather miffed about this for some reason. I never do affiliate links, so I don't care. But essentially the story is that PayPal, which owns Honey, is something that the last idiot of a CEO bought, which has some sort of Chrome plugin that breaks your, well, they basically collect the affiliate fee rather than you if you had affiliate fees, links out. So apparently, I don't think it's a big story. I don't think it's going to affect PayPal, to be honest with you. Fox says we need to hit 500 likes. Thanks very much for that, Fox. Appreciate you. Arjun, you got about 20 cats, and you're not quite sure of the number, right? So they've taken over properly then your life. Good man. Will the class go over options? No. For the masterclass today, it's a pure stocks play. You can apply what I teach you with options, but I'm not going to talk about options. Make a lot of money. Why are you analyzing these weak ass stocks? Plenty of small caps. Oh yeah, it's plenty of small caps. A lot of money in small cap trading. It's just a little bit riskier, and people tend not to ask about small caps, which is why I look at these. But yeah, I screen small caps. I buy small caps for sure. SoFi. Okay, there's a lot of requests here for SoFi. Let's have a look. Is the masterclass free? Yeah. Does it say that down below? Doesn't it say free masterclass? I think it says free. So SoFi at 1643. I like it. Looks good. We're just continuing this sort of sideways, slightly exhaustive action here, and that's okay. You know, the trend line is still intact here that I put in blue here. Basically, you know, that one here still intact. So we're looking good. We're looking happy. The resistance is at $17. We've taken the Powell announcement of there will be less interest rate cuts very well. So I'm happy about this. I'm excited about the earnings coming up. I think they're going to knock it out of the park. Did you trim the banana trees? No, I didn't. Why would you trim a banana tree? That'd be a silly thing to do. I mean, the leaves eventually die off, and then you might cut it off. But no, never trim banana trees. Can you please add volume to the Trade Vision screener? Interesting idea. Yes, that's a very good idea. It's a very good idea, Christian. Any love for Neo? Just geopolitics. In my portfolio, don't really mix. They're not really friends. How can you get into SpaceX, says Richard? It's a privately listed company, so there are some organizations will let you give access to it. If you're an American and you have a SoFi account, for example, and you have a certain amount of wealth, they'll let you buy some. When is SoFi's earnings? I don't know. Here it is. It says 27th of January. That's the date I've got here. They sometimes move a day or two, but that seems about right. So late January. So I think when the earnings season kicks off, it'll probably be a good one. But until then, we might see a little bit of a wobble here in the market. Be better there. I like what you did there. You see, he buttered me up gently, gave me a compliment, and then he slid in his, can you please look at my stock, which I'm going to do because you asked so nicely. Airship AI Holdings. Okay, I must say from the outset that companies that include the latest buzzword in their company name make my skin crawl. And I always think that looks very dodgy. Doesn't mean that it is, but it just looks dodgy. Like, why do you have to do that? It's like, you know, when everybody had .com, like literally, I had an office for years in a building that called itself .com house. I mean, it's like, why? Why go there, right? There was nothing .com-y or techy. It was just an office building, just a regular office building with nothing particularly .com-y about it. So it's just a bad idea. But is it a breakout? Well, yeah. I would argue that it was a breakout here in early November. It did it again here in 18th of December, and it's trading at the top end of this range here. So it looks pretty good. Looks pretty good. I know nothing about the company, but yeah, classic kind of breakout pattern. Welcome from Felix. What we stay from Fox Gaming. What's Fox up to? Is Rigetti a true breakout? It certainly was. Make Money Inc. Yeah, exactly. Like you know, if a bank called itself Make Money Bank, would you give them your money? Probably not, right? What's your prediction for January 20th? Well, I think a flurry of activity. I think you will never have as many executive orders with wide-reaching impact as on that day. I think he's going to go full-blown Trump mode on day one. And that'll be interesting. It'll be entertaining, but it could also cause the market some uncertainty, and the market doesn't really like uncertainty. RCAT, funnily enough, I was also looking at that earlier, and as I was doing that, my cat was climbing over the screen following my mouse, learning chart analysis, undoubtedly. They're still up to it down there. So is this a breakout? Yeah, of course it is. I mean, literally, we'll go watch the masterclass or join me live today in the webinar. I'll teach you, and you'll see exactly what we're talking about here. I find names like the Honest Company very dodgy. Yes, me too, me too, me too. I think that was probably the initial thing there, but the trouble is that something like the Honest Company will eventually always get gobbled up by Procter and Gamble. And then it should be renamed, you know, the Evil Company, and that doesn't have quite the same ring to it. So I think people should just call stuff something less kind of weird. Charlie says, is there a discount for your platform? I think there is. I think there is actually, yes. If you sign up to Trade Vision here today, I think there is still at 60% off. Link is down below here. Here it is, felixprehn.org/Trade Vision. Any hopes for Intel? There's always hope, my friend. But hope is not an investment strategy. And now, and yeah, the market here, let me show you. This is pre-market. This is as the market's now open. It's not terrible. I mean, Nvidia down at 1%, Microsoft down 1%, Tesla 1.3. These are all relatively modest moves considering the rally we've had. But yeah, people are feeling a little bit antsy today. Also bear in mind, volume is probably quite low today because any self-respecting, you know, Wall Street trader is obviously still on holiday and, you know, somewhere in, you know, lying in some sort of white powdered substance, you know, snow, I meant. And I don't know what you were thinking about, but, you know, very few things are up. BA is up and Pfizer, which must be a good sign, you know, Father Christmas is real and all that. Rumble, some of you are mentioning here, indeed. People still selling off Nvidia. Little bit. I mean, sell-off is a bit of an exaggeration. It's down 1.2%. Is AAP looking all right, or should I start seeing a shrink? Generally speaking, if you're thinking about seeing a shrink, it was probably a good time to see a shrink about 12 months ago. But I'll humor you and tell you whether you belong in the loony bin. AAP, yeah, not loving it. I mean, it's decent, but let me show you what the problem is. So you got a high here, you got a high there, 3 highs here, right? And now you're forming lower highs again. So you kind of have this, you know, a little bit like that. It might be okay. It might be just fine. It might be that we continue to go up, but it's sort of, it's almost one of those horrible head and shoulders jobs, which is never a good thing. But, you know, at the moment, it looks pretty decent. It might well be that here, that was the low, which was about in line with these ones here, and now we're bouncing up. But volume was non-existent the last 3 trading days because everybody was eating too much, you know, Christmas cake, and therefore I can't really tell much here. But yeah, I'd want to wait for one of these green candles with some decent freaking volume down there. Would you wait till after inauguration, says Monique? It really depends on your time horizon, Monique. If it's your time horizon is days and weeks, then this is going to be a choppy time period. I think that much is clear. If your time horizon is in decades and you buy stocks every Monday or something, then, you know, dips are typically welcome. It really very much depends on what you're looking at here. VIX right now is at 16, which is moderately low. I mean, we were at 27 a few days ago. And we made money on that, right, on the way up. And I forgot to set the trade on the way down, which was silly of me, but I'll do it next time. I might even explain it to you. Okay, Fox is championing here a cooler technology. Are you slipping him a $5 or something, Fox? Is that what's going on over there? You got a little side hustle going on there. Well, what is this? This is a stock you should have bought in November. Helpful, right? That was the breakout there, and I say that with great hindsight. But no, it was obvious actually the 3 days before that. Why was it obvious the 3 days before that? Because volume started to pick up from non-existent 6 million shares here to then 16 million shares, and you went up 9%. That was a breakout. You can't tell anymore because we had this big, huge volume here, but that was the warning sign. The next day and the next day again, 3 days, some bastard who knew something was going to happen was quietly accumulating positions. That's what that says. And then it breaks out and nobody spotted the insider trading. All hail the SEC's, competence. And the rally then continues. So it was a very nice job, and it's making some people a heck of a lot of money. How to open the drawing box? The one I've got here is a Chrome plugin, but there is a drawing box up here, so you can put in, for example, a nice looking trend line sort of thing. Now there is a cat's paw on my camera. Is that a good idea? Albert, what do you think you're doing back there? He's looking up, which is worrying, very worrying, because there are cables on the ceiling and all sorts. So these guys are really getting up to something. Why are the buy signals in Trade Vision and the Masterclass different? They're a little bit different. Yes, they are. They are. One is an AI algorithm that is based on a lot of good chart analysis, and the other is more my simplified approach to it. And we might well build that into Trade Vision at some point in the future. It is sort of on the list of things, but we have quite a long list of things that people are gagging to have. So, indicators are always indicators. You never have an indicator that's 100% accurate. It just doesn't happen. Otherwise, we wouldn't need traders anymore. And for the moment, we still do. So I like them as indicators. Like, for example, we got, the buy signal yesterday for Toyota Motors, for example, right? That was a very good call. It looks like it continues to be one. Whereas Winston is snoozing in the kitchen, hoping for last-minute snacks. How do we calculate resistance and support lines? We actually don't calculate it. It's based on real market maker positions. So if I pull up my screen here for you. All right. Naughty ones everywhere. Here are the support resistance. These are real options market positions, and the options market is the vast market, part of the stock market. It's bigger than the stock market. So that's really what matters. So we know, therefore, where the market makers buy and where they sell. So it's very, very useful information. You have a Chrome extension for Trade Vision, which shows a watch list. Interesting. I like the idea. I shall add it to our list of ideas. Everything's red this morning. Yeah, that's what happens, isn't it? When the market's down a percentage point. I'm very likely to do absolutely nothing today. I mean, we're down. It's growing a little bit here, 1.9% now on Tesla, but nothing particularly concerning given the rally we had on the 24th. So I'm not particularly worried about it. I think it's just going to be one of those days, probably low volume, a little bit of panic, a little bit of last-minute tax loss harvesting and that kind of thing. And then we'll see what Monday, Tuesday brings. Again, could be quite choppy days. And then January, it might well give us a couple of weeks of headaches. And then I think it'll take off massively. So I think there's some good opportunities to position ourselves well in there in the next couple of weeks. Merry Christmas. Merry Christmas to you as well. Winston's chasing stocks in his dreams. I think it's probably tennis balls and other friends he's got there. Come and join me in about 8 hours or so, 9 hours live. We're running a live masterclass, the last this year, that's for sure. And as I say, 4,000 of you have already signed up to that, which is absolutely bonkers. We have space for 3,000. But I know that people don't always show up because, I don't know, life happens and people don't follow through. So be one of the ones who grabs your the last spots there. I think at 5,000 signups, we'll close it. So that'll be in the next couple of hours here. So check it out, felixprehn.org/webinar, and we'll actually live walk through how we make 2025 your best year yet. I thank you very much for tuning in. Thank you for watching. If you got some value out of this video, share it with a friend. Spread the joy, spread the love, and I hope to see you in 8 hours. All the